Hello and welcome. I'm Mike King, and this is an Air Cargo Unpacked interview, a Freight Buyers Club production. Each month, I sit down with Neil Wilson, editor of TAC Index, the leading global price reporting agency on air freight rates and the calculating agent for the Baltic Air Freight Indices, to look at where air cargo rates are moving and what is driving them. Now, air freight rates have been, rather dramatic this year. So I started by asking Neil what's been going on with rates over the last month or so and how current levels compare historically.
Hi, Mike. Great to be on the show again and give you our perspective on what the numbers are showing and what we hear about what's behind that. After the start of the Iran war, we had that big spike in March and rates stayed very high through April. I think the picture for May overall was that the pressure eased a bit. The overall index, our BAIOO chart, which is the global composite, if you like, of all lanes and all outbound, that was down a tad. It was down a tad, but not much, a couple of percent over the month. And from a historical perspective, I think the thing to bear in mind about that is that it's still at very high levels. It's still higher than any of the recent peaks. If you look back at 2025, 2024, and 2023, indeed, you have to go all the way back really to the period of the COVID pandemic and its kind of aftermath to see when rates were higher. They were very escalated then because the market was very distorted. Obviously, in the pandemic, a lot of passenger belly hold capacity disappeared. And the market, as you know, is about 50-50 dedicated freighters and dedicated and belly hold, varying by lane, of course. And when that disappeared, there was a big loss of capacity, huge spike in rates. So you have to go back to that period to see when it was higher.
Yeah, massive spike there for COVID. Obviously, the biggest spike that I know, and I've been covering this for about 25 years. So, I mean, that gives some perspective about where we are now. Um, in terms of now, Neil, how much of this is basic demand?
Yeah, I think the demand is still pretty strong, and I think you probably get this corroborated by other sources that you talk to for the podcast. And so, why is it still pretty firm? And I think there's various individual factors. Like one thing is the end of de minimis rules into the EU, which takes effect on the 1st of July. So we see some shippers rushing to move things ahead of that date. There's obviously some movement of things from other modes to air to get there in time. You also have continuing strength on Transpac, maybe not so much direct China US, but other ways where we will come back onto that, and some other lanes like Inter-America also looking strong. And underlying that, I think, is the continuing strength of the AI theme in markets. The AI theme, you see it in equity markets being driven higher, not just in the US, but also in other places, like in South Korea and Taiwan, for instance, where you have some very big semiconductor manufacturers, and the growth of those markets has driven them in the last month to be the sixth and seventh biggest equity markets in the world, overtaking all the markets in Europe, the UK, France, and Germany, which is a pretty significant effect. I mean, obviously, we have to see if it maintains itself, that the AI theme plays out. But we see that at the moment reflected very strongly in the air freight rates out of places like Seoul and Taiwan, where they're very, very highly up year on year, both to Europe and the US.
Let's look at some of those key markets then. The spot rate picture from key Asian hubs. You mentioned it already. How are rates behaving there? Are we seeing that same leveling off that we saw on the overall index in some of these key markets or not?
Well, that's a very, very good question, Mark. Because obviously the reason why we introduced the spot rates is that the market, it has various different segments, and our overall indices, the outbounds and the individual lanes, the TAC freight lanes, they're based on actual airway bill prices. So from those actual airway bills, you can't tell whether the contract was negotiated months ago and it's a forward contract, or whether it's a spot transaction that was negotiated last week or for today. So the spot rates effectively show you the marginal price, the price for moving something today or tomorrow. And if you look at those out of these key Asian hubs, we have three currently. We're going to be adding more. Korea, you can see it was rising. There was a delayed effect there after the big jump in March. It was rising in April. It's sort of flattened out recently, and no longer going up. Obviously, there's intraday variation. If you look at India, the India spot rates, so BAI spot from India, there was a huge jump after. That's a very belly-hold market, and it was flat for a long time. It was a huge jump when the war happened in Iran because that disrupted the flow of goods enormously there in March. That started to fall in April a little bit, and it's gone down a bit further in May. That's what we've seen with India. If you go into Hong Kong, which is the biggest cargo airport in the world by volume, the interesting thing there is that it had been flattening out last month, and more recently, particularly in the last week or so, going into the first week of June, it's been firming up again, reflecting those things I think that we were saying about the strength of demand on the previous point.
Neil, obviously, war in the Middle East has been a major factor in terms of rates rising. Obviously, tied to that has been fuel price increases, which we've seen across modes, not just in air cargo. Where are those jet fuel prices at the moment?
Again, a really good question. So what's underlying this? Why did rates ease a bit in May? And I think one of the key factors was that jet fuel rates, which had escalated dramatically, as I think we talked on the previous call in March and in April. If you look at the IATA jet fuel price monitor, which reflects the Platts data, you'll see the jet fuel prices dropped every week in May a little bit, cumulatively more than 24%. So they're still up 60% year on year, more than crude oil. But it's interesting why that's the case. They are firming up again, I should add, in June, as I think you can see from that same table. So why is that? I think we mentioned this last time. There were a lot of flight cancellations in May, which may have eased demand a bit. There were 12,000 plus at least announced, led by Lufthansa, Turkish, China Eastern, various other airlines. There was also the release of strategic reserves by the US and by others to add supply to the market. And the other thing that was happening, I think we noticed on the call last month, was that the China, which had stopped exporting jet fuel initially when the Iran war started, had started again, which again eases supply, particularly to its neighboring countries in Asia, which rely on China for a lot of those supplies. The final thing, I suppose, is that there's been expectations that there will be a deal between the US and Iran to end the conflict, and that there will be a reopening of the Strait of Hormuz, which is something that is going to be needed. So markets continue to be quite sanguine and optimistic about that that's going to actually happen. As of the call today, it may be different by the time you put this out. It still hadn't quite happened yet. So, and in the meantime, those inventories of jet fuel and of crude are continuing to go down. So they can't go down forever.
Yeah, well, there's a lot of things that could happen in what 2 days before we until we release this. I think I was reading some research from Rabobank this morning, and there's now been 39 declarations of peace in the just over 100 days of war in the Middle East. War is not a funny matter, but the declarations of peace it's like Groundhog Day, isn't it? Thanks for that, Neil. Now, just a little announcement for everybody. The Freight Buyers Club will be attending Air Cargo China at the end of June. In fact, we'll be doing some interviews, I think, at the TAC Index stand. If anyone wants to come along and say hello, details on screen now. Neil, what else have you guys got going on?
Well, we're working on various things. I don't know whether I'm allowed to say too much about them. One of the things is we have this additional tool called TAC Explorer, where in addition to the lanes where we produce indices, we're adding guidance on about 800 more lanes where we have data. We have some data, but we don't have indices yet. But they'll give users a lot more guidance on some of those smaller lanes around the world. We're also adding AI tools to the data so you can explore further the characteristics of each lane. And going onto the Air Cargo China, I won't be there, but my colleagues, our founder and leader, John Payne Burnett, and our head of research, who runs the data team, Chris Taylor, plus our head of sales in Asia, Al Lambert, they'll all be there, hopefully seeing you on that stand in Shanghai.
That was Neil Wilson, editor of TAC Index. Many thanks to Neil for his time and analysis, and thanks as always to TAC Index and the Baltic Exchange for their continued support of Air Cargo Unpacked. For more from the Freight Buyers Club, please subscribe wherever you get your podcasts and follow us on LinkedIn and YouTube. I'm Mike King. See you next time.